So, good morning, everyone. Welcome to the session two of this International Partnership Conference. And we have four presentations in this particular session. And uh, firstly, I welcome um, Dr. Muhaizam Musa, University Utara, Malaysia, Sintok. Uh, Dr. Muhammad is going to present on the topic of wave of fintech and digital banking in Malaysia, the disruptive technology impact to the society. Right. So currently he is employed in the University of Utara, Malaysia, senior lecturer with the Department of Bank and Risk Management, School of Economics, Finance and Banking. Prior to joining this institute, he worked as a senior executive at Central Bank of Malaysia and also employed as a training broker, KAF money broker in Kuala Lumpur. So his research interests include Islamic finance, blockchain, and digital banking. He received a doctoral degree from the International Center of Islamic Finance, Kuala Lumpur, in the area of Islamic finance. So I welcome Dr. Muhammad to take over with this presentation.
Thank you very much, Dr. Riaz Asmat. Welcome and good morning. I would like to present my topic this morning. It's about wave of fintech and digital banking in Malaysia, the disruptive technology impact to the society. And the flow of presentation would be as follows. We have the introduction, we have also the background to the disruptive technology studies, and we look into how disruptive is fintech and digital banking to the society. What fintech and digital banking brings to the society, and then we will follow by a short discussion of the findings, and finally I will end up this presentation with the conclusion. Now, first of all, the society in Malaysia are changing their behavior towards technology acceptance in the banking services as the country is embracing the concept of digital Malaysia in the year 2021. The most impactful sector from the technology advancement are the banking sector, whereby the delivery channels are beginning to incorporate more engaging service for their customer and in a secured manner. So if you look into the disruptive element of technology, it would be defined as a new ways of conducting things that disrupt or overturn traditional business method and practices. And that is why this study is being conducted. Let us look a few bits in this study on the background of the disruptive technology studies that have been conducted by previous researchers. If you look at this slide, it can be noted that earlier studies have begun to look into disruptive technology in the year 1942 by Schumpeter, looking at the creative destruction on capitalism, socialism, and democracy. And then it moved towards looking at not only in the impact of the society, because the technology actually we are currently on the fourth industry revolution. So of course, when we look at the disruptive technology studies, there are certain scenarios that we have to look, and that is why looking at a research by Clayton M. Christen, we look at this element in the studying the disruptive study, which is we can look at two parts of disruptive impact, which is one, disruptive innovation, and two is sustaining innovation. The study by Clayton actually provides us an understanding on how should disruptive technology should actually look to the impact of the society as a whole. Now, in this study, I want to explain on how disruptive is fintech and technology, digital banking to the society. If you look at three elements, the first thing on how fintech and digital banking impact is the technology that it brings. Now we have artificial intelligence, we have also the digital banking, and then we look into the cloud computing and also the blockchain. So if you look the second aspect of the disruptive impact is towards the people. Now, in the people element, we can see that how the use of social media impacted the people, how the peer-to-peer lending is actually providing significant impact to the people, and the trust uh, actually have impact the people because of the disruptive element of new technology, had made it more open to certain situation. For example, the trust of the private information distributed online and so on. And then the third element of how disruptive can happen is in terms of the regulation, where you can see that important elements like know your customer, right, is being challenged with the disruptive technology. We have also the Anti-Money Laundering Act is something that is challenged with this technology, and also the introduction of the central bank digital currency or CBDC will disrupt the whole monetary policy that will be used by most of the central bank soon. Therefore, what does fintech and digital banking brings to the society? Now, we should be looking at the positive side first before we try to evaluate the negative part. Now, if you look here, first thing, it can bring manage finance in the way that you want. Second is to make faster and easier money transfer, and then it bridge the gap for the unbanked. And then you can find that security of not losing your wallet anymore. And finally, anytime, anywhere. So all of this impact, all right, what it brings to the society, it comes to the technology that drives it. So we can see that the disruptive innovation that comes in fintech and digital banking comes with this uh, elements. For example, we have the startups coming up, which changes the way how people is being building up businesses, new businesses model. We have Sandbox to be the testing ground for new innovation in the financial apps, especially in Malaysia. And then we have the e-wallets being used, right? And then we also have the peer-to-peer lending. We have the disruptive innovation in e-remittance, and finally, especially the crypto digital asset exchanger, which is being used in Malaysia to allow the transaction of crypto assets to be transacted legally. Therefore, we look at this point, data that I got from the global Findex provided by the World Bank data, and we can see that previously in the trend, right, in recent years. First thing, the first graph is looking at how much money is being transacted online physically. So we look at it is a decreasing trend because the disruption caused by the e-remittance allowing them to use online, and sometimes can be used underground system, right? For example, in the crypto currency. And then the second impact is the number of branches exists in Malaysia has been in a declining order, where it is impacting both the physical transaction of people, and it will impact the society where uh, those elderly people as well as those unbankable people would not be having the access of branches in the future if the trends goes towards implementing this disruptive technology whole. Therefore, I come to develop several questions to test on the impact of digital uh, banking as well as fintech, because both provides disruptive technology and how it would impact the acceptance level, as well as looking at how the society view of these two technologies ever since, especially during the COVID-19. So the first question is to look at the attitude, the customer attitude, towards technology. So we are using the Pearson correlation test. And second one is to look at the significance of difference in gender of customers to the acceptance of technology change in the bank and finance in Malaysia. So we use independent sample t-test. The third question we want to look is the significance of relationship between attitude factors and the level of customer involvement in technology changes in banking and finance activities in Malaysia. This one we use Pearson correlation. And fourth question we want to study is there a relationship between perceived usefulness, perceived ease of use, attitude towards using and behavioral intention to use among customer in banking and finance. Now this question, the fourth one, is derived from the technology acceptance model, and we use the one-way ANOVA test to measure this relationship. And finally, this study also wants to look into what are the dominant factors in the technology acceptance model for the use of fintech and digital banking amongst the customer in banking and finance in Malaysia. And we use a regression analysis to put out the result. So before we go into the discussing the findings result, let's look at the challenges facing Malaysia on fintech and the banking. So first thing is the acceleration in the integration of finance and digital lifestyle is rapidly evolve how society thinks and use technology in their daily life. For example, the use of iPhone in replace to older technology phone that doesn't uh, help use certain software or certain apps, for example, the face recognition and also the AI that is able in the technology. And then the second one is the coexistence of different forms of money. Of course, when we look at money, it must be something that is the regulators have the ruling or whether or not to allow certain assets to be considered as a legal tender in a country. And in Malaysia, we don't accept crypto asset as a legal tender. We only allow digital asset exchange to operate as a form of like how this asset can be exchanged in form of Malaysian ringgit as the legal tender. So of course, this will be some challenges, right? And then the financial data will become more liquid and acceptable. Of course, with the use of big data, with the use of other technology, machine learning will need the flawness of data, financial data to come out. And this will impact on how certain data, private information is being delved in giving information other than banks, because this is a situation happening in Malaysia. A lot of information being used by scammers, right, to fool the customers. And finally, this is what I want to bring: cybersecurity threats and scams. So these are the challenges faced. So I haven't shown you the result yet. Let me show you my result before go to the conclusion. Okay. Sorry about this. All right. So let me show you the result of the study. We can see that this is an initial result findings. We see that 50% of the sample collected, and we this study only distribute 150 questionnaire online. So from the result of the sample, 50% strongly agrees that e-money and e-wallet makes the transaction easier. 72.5%, which is quite high, strongly agrees that e-wallet and e-money is very easy to use. And we also have the result on 45% of consumers strongly agree on the using e-wallet and e-money because it is practical and efficient. This study shows a little bit of the downside of practicality and efficient. And finally, the data on whether they want the motivation to use technology, disruptive technology, 62.5% strongly agree that they would I will recommend e-wallet and e-money to others. So we want to look at the result here. So basically, before we go to the conclusion, okay, let me show you. This is the framework that I want to share, right? And we go to the conclusion. Of course, looking at how the result comes out, the impact of disruptive technology to the society can be a positive when the government gives support to the advancement of such technology. For example, the government of Malaysia introduces Malaysia Digital Initiative recently in the year 2021 to focus on several aspects. For example, financial inclusion, right? The use of accessibility of technology, internet in rural areas, Sabah and Sarawak, and therefore that is why in the corporate sector, Digital National Berhad or DNB was established to work with other telco operators, telecommunication operators. There are 4 who agreed to work on to invest 5G infrastructure throughout Malaysia, and we look into how the public is presuming digital economy in their daily life. The participation of people in the gig economy is increasing tremendously, especially during the COVID-19. Many people lost their jobs. Right? So the alternative source of income is the gig economy. And the accessibility of newer smartphone is an impact towards the acceptance of this disruptive technology. For example, the RFID technology is being used, the near devices to actually transact is used in Malaysia. For example, when consumers, they use the highways, they pay with RFID technology, where they just pass through the toll gate easily without opening their windows. So some learning outcome from this study is needed to highlight this particular thing to improve how the perception of the society, which is more social engagement is with the public, is in order to explain the ease or practicality of using their financial technology, which will involved in terms of peer-to-peer technology, in terms of improving the trust of the people to the technology. So I think that is what I want to present for today. I hope there will be an encouraging discussion happening with this topic. Thank you very much.
So, thank you very much, Dr. Muhammad, for the presentation. Um, so, I begin with my question. Actually, I was about to ask regarding the financial inclusion part of this presentation, but at the end, you have mentioned like uh, these fintechs are actually driving the financial inclusion aspect, which is similar situation in developing countries, particularly in India. Financial inclusion is basically achieved through this mobile penetration and digital things and 5G things which you have mentioned actually. Of course, your studies post-COVID, right? So after the COVID, you have done the study. In case if there is any data set available, yours is primary data. So you can add one dimension like whether the customer's attitude has changed after the post-COVID, before the post-COVID like that. So such dimension can be brought into the study because we don't have data pre-COVID, so we can ask them a direct question like whether your attitude has changed. Obviously, it will be uh, that would be the impact basically. That dimension can be included in the specific to COVID impact. Is there any other questions or just uh, Professor Bill have mentioned about the advantages of going digital than going for face-to-face banking kind of thing. I just asked you a question in that direction actually. Um, um, Is it not the banking or financial services company using this digital dimension at their advantage? For example, you will be getting a message like you are allotted with a pre-approved loan. But when once a required customer ends up in the bank and they'll be telling like, oh, this is the first stage of approval, we have a process in the second stage. And finally, there are chances like a whole lot process is still there in the particular process, and people will get disappointed when they reach to a bank. Like that. So how banks are actually using this thing for sales dimension rather than this financial inclusion things and all. How for the sales dimension they are using this like way of rendering services or digital banking. Can you share your observations?
Okay. Well, based on my observation, well, the way that the service is being delivered, especially right now with all the availability of technology in the IR 4.0, actually it is important to see how the industry is actually utilizing such technology in their daily operation, because the most important thing that is changing is how consumers is looking at banking. Now consumers, they are looking at how, whether or not is there safety in banking. That's the number one issue, right? And secondly is looking at another concept called user experience, user interface, UX/IX. So when we look at certain services where consumers, they felt uneasy with certain aspect of the service, of course the feedback comes from not from the banking, but also is coming from the experience of the user itself. And that's why what banks is changing, not the processes, but is about engagement, and using such technology available to them. And the availability of technology would, if utilized correctly, would enhance consumer experience. So for me, my observation, the definition of banks are also changing, because if you see, the digital banks is different than those legacy banking. So it is up to the banking to decide how to utilize it, instead of taking it as a disruption. So thank you, Dr. Riaz. I hope it answer your question.
Yeah. Understood. Is there any other question for the presenter? Of course, this is some research dimension. I just wanted to, highlight. For example, this is in a typical primary data study. We'll be concerned about the sample size and its determination, so that our usage of analytics tools and statistical significance and all will be getting more precise and appropriate in that particular sense. So I think this is a kind of initial study you have started, or so. The next stage you will be I would suggest to determine the sample size in a very uh, systematic way that will make your findings to be scientifically strong. Um,
True, I agree with you. We need to improve how data can be collected to have a more significant result. And I believe I can expand this study to Southeast Asia to look at how it impact the society as a whole. And on looking at the primary data, even though that is challenging, but I believe with the use of technology, it can help. There is a question, Dr. Riaz, in the uh,
one
Q&A
now.
live chat, live question Q&A. There are two. If you have the access.
Yeah. Now I'm able to see. So there is a question from Professor Veridrosho. How much has COVID accelerated the shift towards fintech, and how much caused it to shift? How much it caused it shift to fintech? So I think what is your thing? We have just spoke about this, but in case if you want to add anything to the
Yeah.
COVID dimension, you can please.
Right. Of course, there are significant acceleration of the fintech. And if I may, I would like to show you my screen, but it's okay. Actually, the industry is currently improve, accelerate with the COVID-19, and someone can say that with the endemic happening, people are changing their mindset of using online services, but there is challenges towards this. For example, the internet scams and everything. That's the situation.
Okay, fine. So in addition to that discussion, Professor Zidan Zhao has asked like whether the usage of e-wallet has a larger coverage and whether there is a significant difference of gender, like male and female kind of usages. Have you witnessed any such observations?
Okay. In this study, uh, it was found that in Malaysia, the use of e-wallets is being dominated by the female counterparts. And the reason I would speculate is that they would be shopping online. So even if online, their wallets are bigger than male are savers rather than spenders.
Uh, there there is one more question from Haruna Isalla. What potential crimes may be associated with the e-wallet and so
Okay.
have you come across such things?
Okay, great. Thank you very much for the question by Haruna. So basically, the crimes can be in terms of money laundering, criminals, where people use in Malaysia. We have the problem of donkey account being used by illegal money launderer to use for online transaction. So that's a situation where the KYC, the know your customer, is important for banks and also fintech. And that's why the regulators in Malaysia, Bank Negara Malaysia, is working very hard before they approve any e-wallets application to be used by consumers in Malaysia. They have to go through a process called the sandbox, right? And all the thing that the regulators would check is the KYC elements, the criminal activity is being managed properly. And that is how it should be done to improve the society trust. Okay. Thank you for the question. Sorry,
Okay.
yes.
I think there is no more questions from the audience. Um, so thanks for the presentation.